levels now. Nikhil Rungta is with us, Co-Chief Investment Officer at LIC Mutual Fund. Nikhil, good afternoon. Good to have you here. Oil prices are off sharply, $73, $74. This is good news for a big oil importer like us. Any implications as you see it? Will at the margin, does it help things? Would you look at any specific sectors on the back of it, or if prices go even lower and stay low, does it sort of add one more tailwind to the market? What's your sense?
Yeah, hi, good afternoon, and thank you for having me back. Definitely, it's positive for India as a country, and we are definitely bullish on a couple of sectors which have this crude as their raw material. So there we will see a decent rise in margins, and we are hopeful that it will settle down at around similar level of around 70, 75 odd levels. But yes, it's a thing to wait and watch what happens globally. In terms of commodities specifically, definitely it's one of the large commodity for India as a whole. And it does impact not only one, two, but many sectors.
Hi, Nikhil. Good afternoon and good to see you, Ben. Nikhil, what's your take on the chemical space? And I think one of your funds have Sudarshan Chemicals. You can correct me if I'm wrong, but they have gone ahead and they've made a big acquisition. Your comment first on the chemical space and about this, these Indian companies going out there and making these large acquisitions. Sometimes they don't turn out according to plan, but sometimes they work. Your comment.
So, hi. Definitely on the chemical as a space, we do like chemicals, and we believe past 2-3 years, the sector have not performed at all. And going forward, we see that the sector have bottomed out. The commentary from the managements are also improving. Coming to specific companies, I mean, without naming, a couple of Indian companies have definitely made few acquisitions outside. But here we need to go on a wait and watch mode. How these specific companies, which are going for an acquisition larger than their own size, definitely not only global, but last year we saw one of the Indian company going out for an acquisition larger than its size, and definitely the stock performing well. Here as well, we need to wait and watch what exactly they are doing. But yes, they are actually diversifying themselves, be it in terms of additional customers, new customers which we are gaining, or in terms of additional facilities or technology which these guys are getting from these acquisitions. So we are bullish on this space, and we definitely like these companies. A few of them definitely work out, few of them don't, depend given the time horizon. And yes, the company under review have already done a couple of acquisitions historically. So we need to wait and watch this type of acquisition, how it plays out going forward as well. And we continue to remain bullish on the sector and space as a whole.
Nikhil, hi, afternoon. So based on the IT numbers that have come out so far, TCS, HCL Tech, Tata Elxsi, is there a case to go ahead and increase the weightage in technology stocks?
See, definitely. I mean, since past couple of months, 2 times when I'm coming, I have indicated that we continue to remain positive on the IT space. And definitely one thing which is very clear now is the space is bottoming out. The commentary which we are getting from the US market in terms of IT spending, specifically on the from the BFSI entities, is they have started looking at these things incrementally. And your election is also around the corner, just around a month from here. So we will see things improving from here on. Earnings have bottomed out, and we continue to like the space, and we are increasing our exposure in the space as well.
Got it. That's IT. Nikhil, hi, good afternoon. Want to get in your thoughts on the auto space, right, in light of this mega IPO that's there in the market. And we were discussing this with the Hyundai management as well. And the question that I have is that the slowdown that we're witnessing in passenger car sales, is that only cyclical, I mean, temporary, or is it a structural change? Because the post-COVID revenge buying, or pent-up demand, whatever you want to call it, well, now that it's completely behind us, what is the new normal? And that's the PV side. And then there's CV, because though the economy has been firing, there's nothing wrong. I mean, we talk about growth almost across sectors. I mean, the CV cycle is just not picking up at all. So what's your, slightly more short to medium term view?
So on the auto side, definitely we are more bullish on the auto ancillaries compared to autos. Last time as well, I indicated the same thing, because in auto ancillary, you get to play not only your individual or PV or CV, but you also get to play your aftermarket and industrials as well, because a lot of auto ancillaries are moving into these industrials and defense as well. Of course, on the auto side specifically, this we believe is just cyclical. What we have seen, I mean, if you want to put a word of post-COVID era, then we believe that post-COVID, I mean, 4 years is too long a time horizon. That should have been the part of, or should have been the case only for the initial 1 or 2 years. But what we are seeing in the past couple of years is definitely increase in your premiumization and discretionary spending. Two-wheelers numbers you have already seen, they are definitely good as of now. On the CV space, slightly on a wait and watch mode. Tractors, channel checks are indicating improving cycles there as well. So we continue to remain bullish from a medium to long term perspective. But yes, we continue to remain more bullish on auto ancillaries over OEMs.
Do you have exposure, Nikhil, to brokers or exchanges like BSE, CDSL, etc.? They continue to soar.
We do like them, but yes, valuation continues to remain a concern for them. They'll be definitely be part of our portfolio provided the valuation allows that.
That's brokers. What about other non-lenders, non-banks, non-NBFCs? I mean, you have the life insurance business, you have wealth management, asset management, general insurance. What else do you like?
So on the financial side, we like more of non-lenders over lenders. In non-lenders, specifically the insurers, the wealth managers, specifically the AMCs, we do like. On the lending side, we are more bullish on the NBFCs over banks. Of course, for the banks, it's more of near term rather than a medium to long term. Over a medium to long term, we continue to like banks as well, because we believe the valuation there are justified in this type of market where you are trying to find out opportunities or value pick. So financial as a whole have now become a value pick in the entire gamut.
You know, Nikhil, as we speak, post those numbers coming in from HDFC Life, the biggest losers in this hour is actually all the life insurance names. HDFC Life, SBI Life, ICICI Prudential, all of them, they're getting smacked actually. It's a marginal miss on the VNB margins, but the street is not taking it lightly for the time being. I don't know whether it's an over-exaggerated move, but these stocks have pulled back considerably. Nikhil, final question before we let you go. What about Reliance Industries? You know, that was the poster boy of the big run we had in the last few years. But in the last 6 months, it's been a little bit off color. We're looking at a brokerage note today. They are indicating that at these valuations, it normally makes money. Would you be in that camp? It's already part of a couple of your funds.
So I won't speak on a specific company, but I'll put it this way. Definitely from a medium to long term perspective, we do like those companies which are moving into these emerging themes. The new energy vertical which the company have started, we definitely like that, and it has actually started making money for the company as well. So we continue to like the space, but yes, we are in the large cap space. We are playing more from the position sizing rather than individual stock specific. So most of these stock will be part of our portfolio, but in terms of portfolio sizing, we'll be trying to bring alpha from there.
All right, we'll leave it there. Nikhil, thank you very much for joining us. Good speaking with you. Appreciate your time here on CNBC-TV18. Well, I think we're going to take a quick commercial break.
For more news and updates, all you need to do is follow CNBC-TV18 on all of our digital platforms.